you see are building blocks to a $600,000 to $650,000 price, and perhaps $1 to $1.5 million price by 2030. We think most people in the world, at the very least, should have some of their assets in Bitcoin as an insurance policy against confiscation of wealth.
Today we have the CEO of ARK Invest, Cathie Wood, giving us her bullish prediction for Bitcoin, as well as what we can expect from the Fed and where the strengths and weaknesses are in the market. Wood says Bitcoin is in a race against traditional finance and asset classes. She remains one of the biggest cheerleaders for Bitcoin within the institutional space. Cathie has given us a bullish price prediction for Bitcoin's valuation by doubling down on her forecast of a minimum of $600,000 per coin. She is confident of Bitcoin's ability to be at the heart of a revolution in money, given its multiple use cases. Seeing as the fund at ARK Invest has tracked the performance of the S&P 500 over the past few years. We've seen an extended and brutal bear market for stocks recently, and you can be sure that regulation will be front and center in the last part of 2023. Let's check out the latest interview with Cathie Wood as she talks about her outlook for the financial market and where she sees Bitcoin going on its upward track to $600,000. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
The institutional allocation to Bitcoin in the base case, I know at one point we said 2.5%, that may have gone down a little, but if we're right, that assumption alone, I have been in the markets for a long time, and as new asset classes evolve, what institutions do in particular is they tiptoe in. They start with 1%, and then they migrate to 2%, and then they migrate to 5%. So I think in this one, it's 2.5% for the base case. When there's a new asset class, it tends to end up in the 5 to 6% range. This happened to real estate. It happened to private equity, venture capital, which is now much more than 6% in many institutional funds. It happened to the whole category of emerging markets. And so I think it's that one alone is very conservative. And if you look at another one, the corporate balance sheets, Tesla, Square have Bitcoin on the balance sheets, but we make very cautious assumptions. And I think the corporate treasury assumption is 2.5% of all cash and cash equivalents in Bitcoin, and the bull case is 5%. If we're right and the purchasing power of Bitcoin becomes so obvious in the years ahead, meaning the purchasing power goes up instead of cash, dollars, staying pretty flat, if not in real terms deteriorating, then more and more corporate treasuries are going to be putting Bitcoin on their balance sheets. And in fact, they'll be the analysts will start questioning them. Why do you have 95% of your cash in a depreciating asset when you could put it into a cash equivalent like Bitcoin and have an appreciating asset? So remittances is another very big market. We assume 10% of remittances in the base case and 25%, instantaneous, no fees or minimal fees compared to 8% fees as migrants send back to their home countries. Sovereign treasuries, 1%, only 1% in the base case, 5% in the bull. Just like corporate treasuries, they'll be under pressure to start increasing their exposure to Bitcoin. And emerging markets, not just the state treasuries, but all of the populations who are subject to these swings in their currencies and absolute demolition of their wealth when they go through hyperinflations. We assume 3% of the populations in the emerging markets, 3% of their assets in the base case go to Bitcoin and 10% in the bull. So those are some of the cases. And then there's the other utility economic settlement network case, and that's 5% of all settlements in the base case and 10% in the bull case. So that gives you a sense of how we have built those two estimates, and those are pretty conservative assumptions, we would suggest.
A study created by ARK Invest advises on how to invest in crypto, whether you're more focused on decreasing volatility or increasing the Sharpe ratio. Wood feels that if everyone followed this method, it would dramatically increase the value of Bitcoin. The only issue is, there is a large illiquid supply of people who hold Bitcoin and never sell. This restricts the flow of the digital commerce space.
So now with the ETF, what is going on? I think, we know the research people at the SEC, and they know what they're talking about. They are really good. We've met the head of FinHub now, who reports directly to Chairman Gensler. And for me, the disconnect is they know so much and they are so good that I believe this was much more Gary Gensler standing in the way. I don't know for sure, because they could never say something like that. I just know from how we have discussed Bitcoin with them, that they really understand it and they understand its merits, most important. So this is Gary Gensler. Why he allowed, and I will say he because I think he's the gating factor here, why he allowed a Bitcoin futures ETF, which involves counterparty risk, and not a Bitcoin ETF, which does not involve counterparty risk. In fact, it is backed, ours would be backed by Bitcoin 1-for-1 in cold storage at Coinbase. That's why Grayscale has won its case. It is that argument. And so I think Gary Gensler's personal Vietnam is coming around to haunt him. I do think the SEC is moving now. He has, in effect, said, hey, I'm not the only decision maker. There are 5 commissioners here. That means some of the research that we believe is percolating up to those commissioners might be getting through to them and might be the grounds now for the approval of a Bitcoin ETF. And we don't think that the SEC will approve just one. They will probably approve a group of them. And that means it will become a marketing battle. And we do hope that our research, how much we give away our research, mostly because we feel it very important to educate. It's one of our mission and values. We hope that helps us as we, hopefully being one of those approved, go out and start marketing.
One of Cathie Wood's main focal points this year has also been the movement in crypto legislation in the House, signaling the growing interest in the crypto space. Although crypto legislation might face challenges due to political opposition, she believes that the conversation alone will benefit the crypto market, leading to many growth opportunities in the coming months. What do you think about the latest interview with Cathie Wood and her insights on government debt, rapid economic growth, and the ever-evolving landscape of cryptocurrency? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.